The entire crypto market is currently standing at a very critical juncture. We are seeing numerous digital assets approach pivotal technical levels, making the next few weeks exceptionally important for everyone involved. Decisions made by investors and traders in this period could significantly shape portfolio outcomes for the remainder of the year. This is not a time for complacency. Both long-term holders, who believe in the fundamental value of these assets, and active traders who seek to capitalize on short-term price movements must pay extremely close attention to the unfolding price action. The potential for increased volatility is high, and understanding the current market structure is absolutely paramount to navigating the challenges and opportunities that lie ahead. This is more than just a minor fluctuation. It feels like a potential turning point. For those committed to a long-term holding strategy, this phase will undoubtedly test their conviction. It might present strategic opportunities to reevaluate current positions or perhaps to accumulate more assets if prices become more attractive. On the other hand, for active traders, the anticipated heightened volatility translates into more potential chances for profit. But this comes hand in hand with substantially greater risk. Liquidity conditions can shift with alarming speed in such an environment, making disciplined risk management crucial. The use of stop-loss orders becomes incredibly important to protect capital from unexpected adverse movements. The overall market sentiment appears to be teetering precariously between fear and greed, a delicate balance that could easily be disrupted by significant news events or the breaking of key technical thresholds. Bitcoin, as the undisputed market leader, is naturally setting the tone for the broader cryptocurrency ecosystem. Its price action is being scrutinized by millions around the globe. Unfortunately, we are observing some potentially worrying signs developing on the Bitcoin daily chart that warrant caution. Specifically, a bearish divergence is currently forming on the Relative Strength Index, RSI. This occurs when the price of Bitcoin registers new higher highs, but the RSI indicator simultaneously forms lower highs, suggesting that the upward momentum is waning. Such divergences often act as an early warning signal, preceding a corrective price move to the downside. Traders are watching this particular divergence with hawk-like intensity, as its confirmation could unleash significant selling pressure across the market. If this bearish divergence on Bitcoin's chart does indeed play out as technically anticipated, Bitcoin could find itself retesting lower support levels sooner rather than later. The potential magnitude of such a downward price movement will depend on several interconnected factors. These include the historical strength of the upcoming support zones and the prevailing overall market sentiment at the time of the retest. However, it is also crucial to remember that technical divergences can, and sometimes do, get invalidated. A strong and decisive push by Bitcoin above its recent price highs, accompanied by renewed and robust momentum, could effectively negate this bearish signal. Such a scenario would likely trap many short sellers, potentially fueling an even stronger rally. The next few daily candle closes for Bitcoin will be incredibly telling. A clear understanding of Bitcoin's key support and resistance levels is absolutely critical in the current market environment. These price levels are not arbitrary. They represent significant psychological and technical barriers where buying or selling pressure has historically concentrated. For Bitcoin, the immediate support level to watch is situated around the $65,000 mark. This area previously served as a consolidation zone before the latest upward push, indicating potential demand. If this $65,000 support level fails to hold under selling pressure, the next significant support to monitor closely is near the $60,000 price point. This $60,000 level is not only a major psychological figure, but also a historical area where significant buying interest has emerged in the past. A conclusive breach below the $60,000 support for Bitcoin could signal the onset of a more profound correction. Such a move would potentially open the door for Bitcoin to test even lower price targets, possibly within the $55,000 to $52,000 range. These deeper levels must hold to maintain the integrity of the current broader bullish market structure. Conversely, on the upside, Bitcoin is currently facing immediate and formidable resistance near the $70,000 level. This price zone has successfully capped several rally attempts in recent weeks, acting as a strong ceiling. A convincing and sustained break above $70,000, ideally supported by a significant increase in trading volume, would be a very positive development for the bulls. Such a breakout above $70,000 for Bitcoin would likely invalidate the bearish RSI divergence we discussed earlier. This would be a strong signal that the bulls are back in control. The next major resistance target would then naturally be the all-time high, which, for the sake of this analysis, we might estimate to be around the $73,000 to $75,000 region. Successfully clearing the previous all-time high would unequivocally signal a continuation of the overarching bull market. This could trigger a fresh wave of buying interest, potentially fueled by fear of missing out, FOMO, as new capital enters the market. The ongoing battle between buyers attempting to defend support levels and sellers looking to protect resistance zones truly defines the current tense market dynamic. Meanwhile, Ethereum, the second largest cryptocurrency by market capitalization, is also positioned at an interesting technical juncture. Ethereum has been observed trading within a relatively well-defined range over the past few weeks. This sideways price action or consolidation has been occurring roughly between the $3,600 support level and the $4,000 resistance level. Periods of consolidation like this often precede a significant and decisive directional price move. Notably, trading volume has been generally decreasing during this consolidation phase, which is a typical characteristic as the market awaits a catalyst. Traders are now eagerly watching for a clear breakout from this established range, as its direction will likely set the immediate tone for Ethereum in the short to medium term, significantly influencing many other altcoins. Solana has been one of the standout top performers in the altcoin space over the past year, delivering impressive gains. However, it is now showing some distinct signs of potential exhaustion, and is facing considerable headwinds. The high-flying digital asset is encountering significant selling pressure at its recent highs. We have observed some noteworthy recent bearish signals developing on Solana's price chart that demand careful consideration from market participants. Most prominently, there is a potential double top formation emerging around the $180 to $190 price area. This classic technical pattern often indicates an impending trend reversal from bullish to bearish, signaling that upward momentum is fading and sellers are gaining control. Adding to the concerns for Solana, trading volume has been noticeably declining on recent attempts to push the price higher. This pattern typically suggests weakening buying pressure and a lack of conviction among bulls at these elevated levels. Furthermore, Solana's Relative Strength Index, RSI, is also exhibiting signs of a bearish divergence, mirroring the situation currently observed with Bitcoin. This occurs when price makes new highs while the RSI makes lower highs. These combined technical factors warrant a cautious approach for Solana bulls in the immediate term. The risk of a deeper pullback has certainly increased, and traders should be prepared for heightened volatility as these patterns develop or potentially get invalidated by renewed buying strength. The key support level for Solana that must be closely monitored is currently situated around the $150 mark. This price level has acted as a reliable support on multiple occasions in recent weeks, indicating a zone where buyers have previously stepped in. A decisive break below this critical $150 support could trigger a much sharper and more significant decline for Solana. In such a scenario, the next area of significant underlying support would likely be found near the $120 price point. On the resistance side, Solana needs to convincingly overcome the formidable $180 to $190 zone to regain bullish momentum. A strong and sustained break above this area would effectively invalidate the bearish double top pattern and the bearish divergence. XRP finds itself in what can only be described as a particularly precarious position within the current market landscape. The token has been a notable underperformer when compared to the broader cryptocurrency market for quite some time now. Its price action has been largely characterized by sideways, choppy trading, lacking clear directional conviction. Currently, XRP is trading around the crucial 50-cent price mark. This level represents not only a significant psychological barrier, but also a critical technical support zone that has been tested multiple times. There is a concerning chart pattern developing on the XRP daily and weekly charts that could have serious bearish implications if confirmed, a potential large head and shoulders top formation. The neckline of this potential head and shoulders pattern for XRP is located approximately around the 48 to 50 cent range. A decisive and sustained break below this critical neckline, especially if accompanied by an increase in selling volume, would serve as a strong confirmation of this bearish reversal pattern. Such a breakdown could unfortunately lead to a significant and potentially rapid price drop for XRP. The measured move target for a confirmed head and shoulders pattern of this magnitude could project a price well below the 40-cent level. Therefore, for XRP bulls and long-term holders, successfully defending this 48 to 50-cent support zone is absolutely crucial to avert a more severe downturn in the coming weeks. On the upside for XRP, immediate resistance is found near the 55-cent level, followed by a more significant hurdle around 60 cents. XRP desperately needs a strong positive catalyst, perhaps related to its ongoing legal battles or significant adoption news, to break free from its current state of inertia and overcome these resistance levels. Without such a catalyst, the risk of further downside remains considerably high, particularly if the broader market sentiment turns more bearish. Chainlink is another important altcoin that we are monitoring very closely due to its critical role in the decentralized finance ecosystem. Chainlink has demonstrated some periods of impressive strength in previous months but is now facing a significant test of its own. Chainlink is currently trading within a consolidation phase, exhibiting price action somewhat similar to what we are observing with Ethereum. Its price has been hovering within a relatively tight range, generally between the $15 and $18 levels. There is a tangible risk of a bearish pattern forming here as well if Chainlink fails to achieve a decisive breakout to the upside soon. Specifically, if Chainlink is unable to muster enough buying pressure to push higher, a descending triangle pattern or even a bearish flag could materialize on its chart. These types of technical patterns typically resolve to the downside, suggesting further price declines could be on the horizon for Chainlink holders if support breaks. Key support for Chainlink is currently located near the $14.50 to $15 price zone. A clear break below this important support level could see Chainlink quickly retest the next significant support area around the $12 mark. Such a move would undoubtedly represent a considerable setback for the token and its bullish narrative. Conversely, on the upside, strong resistance for Chainlink is present around the $18.50 level and then more significantly at the $20 psychological barrier. A convincing breakout above $20, ideally on strong volume, would be a very bullish signal for Chainlink. It could pave the way for a sustained move towards the $25 price level, or even higher. Momentum indicators for Chainlink are currently neutral, accurately reflecting the ongoing sideways price action and market indecision.